have been hearing a lot. We would have been hearing a lot about the tax reform. So it's no longer a news that come 2026, we are going to be entering a new regime in the tax system of Nigeria. So, and that's why, in addition to what the different bodies, organizations, individuals have been doing, and for the different thought it's necessary to have this kind of platform together, and it's thanks to Creatoms that has put this together for us. So what's the overview? You might have heard a lot of different information that you've seen confusing. And so what's the overview of this 2025 tax reform? First, we must understand that there are rules in the past. If it's possible to mute those who are joining, I think there is a noise coming from Esther Adeyemo, can you please help us mute your mic? Esther Adeyemo, please mute your mic. All right. We have modern rules now that has been put in place, and these modern rules basically have impact on both the personal taxes and the corporate tax rules. Please. All right. So, and that's why it's important we understand these rules that are now in place. Another thing to this 2025 tax reform is that it has been able to bring about fairer rates. So previously we might be, well aware that, when you earn so much, you pay so much, that's pay as you earn. But in addition to that, there has been a way to sort of regularize the rates of taxes to ensure that the benefits are more for those who are on the bottom and the mid-level of earnings. Then accountability. Yes, the reform also has introduced a consolidated development levy that ensures that it's quite difficult for people to exit the tax net if they actually supposed to be within the net. So it makes sure that people are accountable, and to ensure this accountability is in fact the basis of all of these different platforms. So many platforms for students, for business owners, you see organizations, associations coming together, putting trainings. We have seen the fiscal policy bodies going here and there to ensure that the information is made available and as simplified as possible, so that no one would be able to have excuse under the law that it was because we didn't know, or it's because of our ignorance that made us not to be able to benefit, to participate effectively in the tax processes. All right. So, what are the key taxes that are impacted by this reform? The first one is the PAYE. PAYE is pay as you earn. Who are those who are eligible to pay the PAYE? It's staff. So if you run a business and you have 1 staff, 2 staff, 3 staff, and so on, your staff are actually impacted by this reform. Now, if your staff are earning their salaries are below 20 million per annum, from 20 million per annum and below, the impact of this reform is sort of a benefit to them, because their level of taxes are reduced than compared to the previous tax regime we have had. So personal income tax has been impacted by this reform, benefiting those who are called the medium or the low income earners, while it has a huge impact or a higher impact on those who are earning. The next one is the company. The next one is the company income tax. The company income tax is the tax that is levied on the profit of businesses. This is also impacted by the new reform. We have the value-added tax, the tax capital gains tax, then the development levy. Now we take each of these categories one after the other. The PAYE. what's the impact of the new reform on the PAYE? Now we have a new banding and then sort of more reliefs that have been given on the computation of the PAYE. The first form of relief is the 800,000 that is on every individual. So whether you are low income, mid or high income earner, you have a relief of 800,000 on your annual earnings. So that's the first set of relief. Then in addition to all other reliefs which had been existing before, like we have the pension, the NHF, which is the housing fund, and then the social insurance fund. Now, in addition to that, the threshold has been changed. So the initial banding would come to the slide where we'll see the example of the old and the new. Now, the banding that has been given initially has been changed also, so which gives a better leverage also to those who are the low and the mid income earners. So first 800,000 of the income is exempted for tax. So individuals who are earning in the range of 70,000 below, which comes to 800,000 per annum. So in the range of 67,000 on a monthly basis are fully exempted in the new tax threshold. Then another one is that income above 50 million, of course, is taxed up to 25%. So you would also might have heard that, oh, those who earn more are going to be paying more. Of course, that's part of what this reform had brought, to ensure that those who are in the mid and low are paying lesser, while those who are in the high band of taxes are paying more. Now, I've mentioned in the course of the discussion the recognized reliefs. There have been so many questions about release. How about if I have 4 children? Or what if I live in a house that is far from the office? How about if I pay my staff a bonus? What if it is Christmas and whatever it is? Now, the tax law provision is that all benefits that are given to staff are taxable. However, this first 800,000 is exempted. Any other addition, any other payment made to staff are to be put together in computing the PAYE for the staff. In addition to that, so the first 800,000 cuts across board. We also now have what is called the rent relief. Now, the rent relief states that the minimum of either 500,000 or 20% of your annual rent. So a person whose annual rent is 1 million, for instance, the 20% of 1 million is 200,000. So 200,000 is lower than 500,000. So that 200,000 is what tax we pick. That 200,000 will be net off before we will get your actual amounts that will be subjected to tax. So you earn 1.2 million in a year, for instance. The first 800,000 is taken out, that it is tax free. Then, in addition to that, you're able to provide evidence that you stay in a house where you pay 1 million naira, and 20% of that is 200,000. So 200,000 plus 800,000 out of your 1.2 million that you are earning in the year will not be subjected to tax. So that means it's just the remaining 200,000 out of the 1.2 that will be subjected to tax. So, and if you stay in a place that is quite very expensive, so you stay in a 5 million, or a 10 million naira rental apartments, it means that you'll be able to get higher benefits, but the maximum rent relief that you can get is 500,000 naira. Now let's go to looking at this example of the payee sample of the old and the new. So for instance, a person whose monthly salary is 1 million naira. In the old law, the monthly payee, that means the tax the person would have been paying in the old law, would have been 170,000 naira, 666. Now, in this new law, which is taking effect from January 2026, the monthly salary is still the same, 1 million, but this same person's monthly PAYE is going to drop to 162,500. So that's part of the differences that you begin to observe. That so it benefits those who are earning lesser, and then those who are now of the higher band are those who would pay more. Okay. Now, what are the changes we have in VAT? The 2025 reform also introduces improvements to VAT. Now, the the most important part I want to discuss with us is that it gives us opportunity for those who buy and sell, for those who render services, and then you also build, maybe you get consultants to support you on the services. So it gives leverage to you to be able to channel your input VAT in a better way. Another thing to that is that because the threshold has been expanded, so it also gives you more room to be able to breathe better before you can consider charging VAT. And then lastly, it has expanded the zero rated items. So we have you sell gas as CNG, or you deal in diesel supply, you deal in toiletries, baby product, pharmaceuticals. Those are items that are exempted, and the scope had been increased in the new tax regime. All right, so essential foods. So these are some of these zero rated items. Essential foods. So essential foods are basic food items in their raw form. So please note, in their raw form. Once they are processed, they are no longer exempted. So you sell food, raw foods, in their raw form. You sell food packaged in the open market. It's not like it's already packaged, labeled, all of that, in their raw form. You have medical and pharmaceutical products, educational books and materials. You sell bread, is exempted. Electricity generation, medical services, tuition fees, all exports, excluding oil and gas. So these are VAT, zero rated VAT expansion that we have in the new tax regime. Now let's talk about the corporate taxes. So at the end of the year, now, so VAT are taxes that are subjected to only your sales. So say for instance, now you deal in services, you render services, you have billed your service to be 100,000 for an hour. Now, in addition to the 100,000, if you are within the threshold of a company that should charge VAT, then you are expected to put a VAT of 7.5 on that sum. So you have 100,000 plus 7.5 of 100,000. That is what your invoice should carry. So if your invoice carries that, that means you will earn 107,500. So that's VAT. Now, there is also another tax that is called the corporate income tax. That's the company income tax, company income tax. So these are the ones I want to discuss under this corporate tax update. The first one is the company CGT. CGT is capital gains tax. Initially in the old tax law, it was 10%. Now it has increased to 30% to match the corporate tax. However, it's not all companies that are going to be subjected to this. So it exempts qualifying small companies. What are qualifying small companies? A company is regarded in the new regime as small if its turnover, annual turnover, so turnover is sales, whether paid or not paid, total sales. If your annual sales is 100 million below, so that means below 100 million, 99,999,999 naira. So if that is your annual turnover, you are exempted from CIT, that's the company income tax, fully. That means your profit is not subjected to tax, and you're also a limited liability company. Then you're exempted from charging VAT. So you don't even put VAT on your bills because you qualify as a small company. Then you do not also charge CGT, and you also not charge development levy. All right. Now, let me also mention towards that, in addition to that condition of 100 million annual turnover, you also should not have assets. So what are assets? Things that your business own. Things that you own, equipment, furniture, fittings, office assets, and gadgets. You shouldn't have up to 250 million. If you do, you are no longer, even if you are not selling, your sales is not up to 100 million, but you have assets, you are so rich in assets, equipment and machinery, and it's up to 250 million, then you do not qualify as a small company. So both conditions must be met, the 100 million threshold as well as the 250 million asset base. Then taxpayers are either small or big. So you are either small exempted or you are standard and then not exempted. So once you look at the qualifying rule for small, if you fit in, fine. If you don't fit in, then you are taxable under the new tax regime. What are the new compliance requirements? Let's just brush through some of these. Transactions reporting. So you might have been also hearing all of this information of, they would go to my bank account, they're going to be charging money, government will start charging taxes for my bank account. No, that is not true. However, the revenue, that means the Federal Inland Revenue Service, is able, effective from next year, to get information from banks. So banks are mandated to provide information to them, to report either individuals or to report corporate bodies whose transactions fit into certain amounts. So an individual who does a transaction within a quarter up to 5 million naira will be reported because it shows that you are earning so much. So they report this person is earning, is getting this kind of award, is getting this kind of inflow, is getting this kind of revenue in his account. So it should be reported. Then if it is a corporate individual, once in 3 months, you are able to get 25 million, the bank is mandated to report to FRS so that they will also know that this business is already growing, is moving, is dovetailing towards the 100 million threshold. All right. So in addition to that, we have the failure to register. So there are stiffer penalties. There have been penalties in previous regimes, but they are making it a bit stiffer now to ensure that people comply. So failure to register, you didn't register, you've incorporated your business, but you did not go physically to the Federal Inland Revenue Service office to go and that, which is going to become the NRS. You've not gone there to do your registration, then you have to pay 50,000 for the first month. Then subsequent months you pay 25,000. You did not file. So filing means whether you sell or you didn't sell, just submit your returns and say, we didn't make any sales this month, so we are not making any payment. Just keep filing. We've not met the threshold, but we keep filing. So filing is different from payment. So you refuse to file, there's also a penalty to that. Or you file inaccurate returns, there will also be penalty to that. You did not remit withheld tax. So you've deducted funds from your vendors. You didn't remit it. There's also a penalty to that. You try to bribe an unauthorized officer. There's a penalty to that. You are trying to negotiate with tax officers. And the danger in this one is that you don't know the one that is a trap and you don't know the one that is actually maybe is a real tax officer who loves to be tipped. So you don't know the difference in them. So what if you fall into the hand of the one who is just trying to set a trap for you? So tax officers aiding and abetting is now an offense under the law, and it has a stiff fine of 1 million naira or imprisonment up to 5 years. So what are the steps? Now we know some of this, we are hearing some of this information. What steps do we need to do? It's important that we register with authority. So you saw that in that previous slide, that failure to register is also penalized. Register. If you have incorporated your business, you know that now CAC comes with TIN at the bottom of our CAC certificate, but that is just part of the step. The next step is that you need to get into the NRS office and be properly registered. To be properly registered means they will get your documents, open a physical file for you, and file in your documents with them. Then they will be able to open a tax promax portal for you, which is their online portal. Review your payroll and your pay calculations. You know that last year's calculations would not fit into, that means this current year, 2025 calculations wouldn't fit into 2026. So you need to review and then review your calculations, recalculate them. Then you need to maximize your VAT input. Now we need to really review every document we receive. If someone has rendered the service to you or sold items to you, check if there is VAT on that document. Then it is good for you to use it. You can use it to offset part of your own VAT, which is VAT recovery. So you don't just keep paying extra sum to the Federal Inland Revenue Service. And of course, it's good that if we are not very, very vast on this information, engage professionals. Professionals are going to help you, tax professionals that would help you to manage that area. Then I would want to mention that it's important that we tighten our bookkeeping. We are going to a terrain where we cannot afford to say, oh, I know what my money is. I know how my business is doing. No, you must ensure that you keep proper records. So document every expenses as much as possible, except where it is impossible. Get your receipt, get invoices, insist on it, and try to place yourself as though you were a bigger organization. We know that multinationals, standard organizations would not joke with that. So even though we think that, oh, but I'm still growing my business, it really doesn't matter. We can begin to standardize our processes. And it's also important that we reassess our business classification. So, we had been a business name before, and you might want to be like, do I need to upgrade to a limited liability company? What's our key takeaway? The sincere thing about this 2025 tax reform is that it has simplified some burdens for genuinely small businesses. And of course, anything that takes off the VAT from a small business, that means from a business of 100 million below, I think they've done something to ease the burden, initially coming from 25 million. Now we know that we can breathe until we get to a 100 million threshold. So of course, it has simplified some burdens. Then we also know that, for our payee, our staff can also, breathe better because there are better rates that are applicable for PAYE. So that's another addition. We also know that, initially only those who sell products are able to do VAT inputs, but now it's available even to those who render services. If you have any service that you have benefited from and the vendor had included a VAT on it, you can use that. You've bought equipment, fixed asset for your organization. You can take the VAT element on that document and also use it as part of your input. So it also tightens rules for documentation. That means it's preparing us. I see that as an avenue of preparing us for growth. When we are properly structured, it gives us room for growth. So what do we need to do your registration, be proactive, keep your records accurately, ensure that you are VAT compliant. They give you proper documents. Don't let somebody specify is VAT inclusive so that we can payment your remittances at the right time. What are remittances? You pay the PAYE on your staff salary. That one is usually due on the 10th of the following month. You pay your VAT as usually due on the 21st. Then you pay your withholding tax that you have deducted as also due on 21st. Then filing of your annual returns. If you are a limited liability company, you are expected to file your annual returns before June 30th, on or before June 30th of the following year, or 6 months. That means if you are if your financial year is January to December, otherwise 6 months after your financial year. If you are a business name, you are supposed to do your own direct assessment, your self-assessment, latest by 31st of January of the following year. So those are compliances, timely compliances you need to ensure that you follow so that you would not be open to penalties and unnecessary payments due to the delays that has been imposed. So on this note, I want to conclude that tax compliance is not a burden, it's just our business advantage. So it's good that we are able to embrace it so that we can be able to build stronger and smarter businesses that will foster growth and sustainability in Nigeria. Thank you so much, everyone, for your time. And then we can bring up our questions. So if you have any question, either you can unmute or you can drop it in the chat box. I'll take it up from there and we can discuss together. That's fine. Okay, so we have a question that for businesses that earn that their turnover is 100 million and below, that means below 100 million. Do they
Hello?
That means you are eligible to file. What does it mean to file? To file is an online activity. So it is not done in any office of either Federal Inland Revenue Service or the state IRS. It is done on their online platform. At the point of registering, they will usually open an account for you, an online account for you. For Federal Inland Revenue, it is called their Tax Pro Max portal. Tax Pro Max. So Tax Pro Max portal. So it is on that portal. They will give you a login, a username, a password that you'll be using to go into that portal to submit your return. So there's a page where you will say, oh, I didn't make any sales. So sales 0, and then you will submit it. So that is what it means to file returns. So you file that every month. For VAT, it is due on the 21st of every month. So VAT for December will be due by January 21. So you must have filed it. If you fail to file and you have indicated that you have started business, you already have a Tax Pro Max portal. Once it is 21st of that month, by midnight of that 21st, there will be a 50,000 naira penalty on that portal because it's automated. So there is nothing you can do. The system will generate it by itself. So that's why you need to file, just to say, oh, I didn't make any sales. Sales 0, no cost to it. Final 0, then you submit. So that was the question. All right, so if we have any other questions, so I want to encourage us to either drop in the chat box or indicate by raise of hand, and I'll call us. So Value Peak Digitals, I don't know if you have any of the issues that you want to clarify on this. No, you also would have been hearing a lot of things, and you have picked one or two that relates to you as a business. So you can raise them, then we can be able to address.
Okay, as a matter of fact, I came in a bit late, and sincerely, my network has been breaking up. So I really right now I don't even get any of the lessons. As I said, we should slow down. Unfortunately, it seems like we're already in the question section. So I think I'll have to listen to the recap. Thank God for the recording. Then I believe I'll either contact you one way or the other to ask every necessary question. But right now, I didn't follow the class, so I really don't have any questions. And the time you were talking, you're really talking fast. I was hoping I was going to ask questions. Unfortunately, my network broke. So I'll just listen and hear every that thing you're saying to every other person. Then perhaps I'll be able to comment. Thank you so much.
All right, ma'am. So for businesses that are business names, their tax exposure is different from businesses that are limited liability. So I'm trying to still wait for us to bring up questions. Let me just point out areas that will be related. Business names are sole proprietorship businesses, so they are incorporated as venture. They are incorporated as ventures. Limited liability companies are incorporated as limited liability, so they will have directors, a minimum of 1 director, and so their tax exposures are different. For a sole proprietorship, which is a business name, enterprise ventures, their exposure is related only to the owner and if they have other staff, and they are responsible to the state tax authority, except for their VAT. So if the owner earns on the business on monthly basis, they will wait to accumulate all that you have been earning till the end of the year, and then add that to whatever profits you are able to still have in the business. Pull that together and you will file your returns on your state internal revenue service. That is what determines your own tax. If you have staff, your staff will be subjected to PAYE based on their payroll, their monthly salaries. So that's for business names. The third tax that is related to them is what we call the VAT, and VAT is on turnover. That means on your sales. So sales below 100 million per annum. So if you are still having sales that is below 100 million per annum as a business name or even a limited liability company, you have nothing to do in 2026 with VAT. So it's just to focus on your self-assessment as the business owner, and the staff PAYE. And if you have contractors that are working for you, withholding taxes from them. But if you're a limited liability business, you are fully exempted from that tax on your profits because you are within that threshold of below 100 million. So what will be your tax exposure will be only staff and whatever you have earned. So you have earned salaries, whatever you have earned as salary as the director on that business, and other directors, whatever they have earned as salary or bonus is the only thing that will be subjected to tax. So if you still make profit at the end of the year, that will not be subjected to tax because the business is seen and categorized as a small business. So let me quickly go back to the chat now. There is a question there. Online teacher, students in Nigeria and the diaspora. Okay, so because you are self-employed, so a self-employed person actually is similar to what we call a sole proprietorship. You are the business owner and that's the business. So it is only your direct assessment. Only your direct assessment. If you currently have a turnover that is, and because you're even dealing with education, so you have nothing to talk about in terms of VAT. So basically what you deal with now is only your self-assessment, which is if you are paying yourself a monthly salary, maybe because you don't want to wait till the end of the year before you collect all your money and see the profits. So you've been earning some allowances on a monthly basis. You will still not pay until the end of the year. You will now sit down and prepare your report and say, oh, the total number of students that I've taught, this is the rate that I've charged them and I've collected as their tuition fees. Direct assessment is just the name. That's, you are directly assessed. You are directly, your tax is directly calculated. So that's the name, the title of that tax, direct assessment. Nobody does it on your behalf. It is your earnings. So you directly assess yourself. You analyze, you calculate it by yourself. So direct assessment, self-assessment, based on your judgment of what you have earned, you calculate it. So let me go back to the online tutor. So on that, you calculate all your total earnings from the staff and from the students. So let's say, oh, you had 10 students, each of them paying 50,000. That means 500 students for the month. And you had that consistently for the whole year. So that means you had 6 million for the year. So with the 6 million for the year, did you engage other tutors who supported you? Maybe you took some subjects, you had other tutors who were taking some other subjects. Did you pay for subscriptions? Did you get some other payments? Maybe you paid for internet, you got a space where you set up for the office and you were paying. All of the expenses you incurred till the end of the year, you calculate, were you paying for space rental? All of that will be calculated. What is now left from the 6 million, which is what is called your profit, is what you will plug in on your state internal revenue service calculator to be able to get what your personal assessment, direct assessment would be. That is your tax. So it's called yourself. So you assessed it yourself. You sat down to do your calculation yourself because you are self-employed. You do it personally yourself. So that is the tax exposure you have. The nature of your business does not require a VAT, and then your staff, if they are full-time staff, maybe you decide to have a full-time staff, or if they are contract staff, you've been paying them on a monthly basis, you will calculate all of that to be able to get your profit. Now, if you had staff, on those staff, I would assume that your staff would be contract staff because you are not incorporated as a business. It's just a personal business. Now, because they are on contract basis, you told them, oh, you work on this subject, you take this student. On their earnings, they are supposed to be having some withholding done. But if you don't have any staff, you are just doing all the trainings yourself, then there's really nothing aside that personal assessments. Okay. So daily living. Okay. Advantages and disadvantages. Advantages of tax is that that's what the government depends on to be able to run the organization. Advantages of tax to us as business owners or individuals is that is what enables us to be able to access some opportunities. And then advantages, of course, to those that we are remitting on their behalf also is that it gives them their other benefits that they're able to access because they are taxpayers. Disadvantages because I'm addressing SMEs. I would say that the new tax regime is more of advantage to SMEs because they have better opportunities to leverage on the openings that has been made available for small businesses to grow. So what we should look out for our proper registration. We should look out for our documentation effect, keeping our proper records so that we are not unduly exposed. We should also look out for information that will help us. So, sometimes we just have no forgotten that this is what I need to do at this time, at this point in time or the other. So if you belong to groups where they put in information that will help you, have you made your payments? Have you done your filings? Oh, these taxes are due. Look out for such opportunities so that somebody keeps prompting you and helping you to put yourself in order. And then we should also look out for how our growth comes in. So you've been on 25 million. By April, you realize that, there is a growth, you're already on 60 million. Keep looking out for it so that you not have passed the threshold without realizing it. And if you have passed it and you say, I didn't know when I passed it, know that there is no ignorance when it comes to the law. So we should look out for those things that can expose us unnecessarily to issues on our taxes.
I have a question.
All right, ma'am.
So when I was telling a friend about this class, the person asked me a question that, okay, lot of people that are doing contribution, like 3, 4, 5, 10 people might like, let's do contribution and you pack every month. They are going to be using the person's personal account. So now, how would hope this new tax law will not affect the person that is not even making money from the contribution? Because the only thing they pay for is charges, so that if they want to remove charges from the person's account, So how do you think this new tax law will not affect or will affect?
Okay, thank you, ma. So we know that in our different bank accounts, there are so many transactions that pass through it. The sister can say, take this money, let me send it to grandma, let me take this money and pay it to this person. So there are different funds that pass through our accounts which are not necessarily business related, and that brings us back to that point of documentation. When those kind of inflows come in, there should be a way to track it and say this one is not my sale. Remember I mentioned that yes, they have put measures in place to say, banks also, as you get alerts, when you see that this alert is getting so huge, prompt us so that we can either send a letter or raise queries with those people or call them for questioning. Now, it doesn't mean that once that alert comes into your account, then the bank will say, today, we are no longer collecting the money or we are going to charge you a tax on that money. No. So it means that you might be called, they might be written a letter to explain where you are getting the funds from. So what is needed is that we are able to have clear record, narrations help us. Clear narrations that will help us to know that this money is not purchased. I even observed recently that on OPay app, they have tried to create two sample description. So if you want to make a transfer, you will see they say purchase personal. So it's just something to help us to have at least, because most times people will just transfer, they will leave it as blank. You don't put any transaction description that will help you even recall that this money is not my own. So for the person that is just putting money together as a job or as contribution, as all of those trips, there is no tax attached. Only thing is that you should be able to explain it and say that fund is just contribution from 5 of us that we are doing a sort of money sharing together, and there is no earnings on it. It's just that we put our funds together to be able to a sort of a saving scheme within friends, within a community, within an association. So it's just to be able to explain it. That's why that documentation is very key. If we do our job, document it. If it's just an exercise, we say, okay, Yetunde Ojo, 10 million contribution for January. Sarah Adewusu, 5 million contribution for February. Just something to document it. Because questions may not come immediately. It might be 2 years after, and you are trying to rack your brain to remember what happened, who is even this person, what did I do with this person. But because you have kept that record clearly in a place, you can easily go back and get the information and share or explain. So that's it. All transaction, yes, should be.
Yeah, thank you so much, ma. Sorry, I want to say something before you proceed.
Yes, let me take this last question.
Okay.
On our expenses incurred online. Yes, all expenses. Please keep the records. You pay for Canva subscription, they will definitely send us. Even if it is an email acknowledgement of the invoice amount, you pay for Amazon, you pay for Google Meet subscription, you pay for all of these different online payments here and there. You can track it. You can get that email screenshot, save it. That printout, that invoice they have attached, you took both right from one place to the other, track it. So how do you calculate it? How do you calculate? Now, I will drop that physical policy calculator. I will also drop a link for, that's for Lagos. Anyway, that's still for the current year, but let me drop the fiscal reforms calculator. And that's a link that we can also use to do what will even my tax exposure be. So this one works for next year. You can use that for your next year, calculation to show you for this current year and show you for next year. Put whatever you think that is your income, what is remaining for you, put it there. It will tell you, it will give you an idea of what your payment is. But for every state IRS, for every state inland revenue service, that means every state tax office, at least I know for Lagos, for Ogun, they have that calculator on their portal. So by the time you fill the form, you will think that you are filling a form. As you are filling the form, it will at the end be able to tell you that this is what your tax will be based on the information you have given us. What they're asking you is that give us information. Once you give them that information on that portal, as you finish entering it and you click that you are finished, it will calculate what your tax exposure is. But at least with this link, if you put in your information, you will have the idea that before I go to the portal and enter, let me even know how much I should gather together that I want to pay. So this calculator will be of help. All right, thank you so much, ma'am.
All right, thank you so much for the section. It's really, really mind-blowing. Yeah, I just want to drop this. I believe we have, most people here are teachers. Yes, they are teachers, though we have business owners here. I think you are all familiar with Google Workspace. You have it's Google Sheets. Your Google Sheets can do this. You can open a document for yourself there, name the file, and be inserting it as you are spending money so that you will not stress yourself. Do you understand? And if you can use the Excel sheet, there is no wahala. Please, it will help you a lot instead of looking for exercise book, because anything that is on your Google Drive is safe and it is yours. You cannot lose it because your paper can get lost. I hope you all understand me. So that's what I want to drop for you. Note that. Go and learn how to use your Google Workspace, and all the screenshots she was telling us, upload them in your Google Drive. Upload them in your Google Drive and name them. Open a folder. Just just open a folder, name it my monthly expenses or my whatever. Just put it there, then be uploading. So it will make work so easy for you instead of looking for sheet of paper and biro. Hope you understand me. So I don't know if you have any other question for our mama before she takes her leave. Any other question? Madam Adebola, Mariam Adebiyi, Rebecca Olatayo, Mrs. Amida, Mrs. Yetunde Ojo in Phoenix. I don't know the name.
I've answered my question.
Okay. So
Good evening, ma.
Okay.
Sorry, ma'am. My question is, although half of it she have answered it, but I really want to know more about it. What of when we are doing like cooperative in the school, cooperative society? You know, every month, each teacher used to deposit to the cooperative. So I want to know more. How do they want to remove the tax? Is it from the normal cooperative stuff or from individual that is depositing? Because at the end of the day, cooperative, because sometimes you know they will collect loan, they will return the loan small small. So I just want to know more about it, how the tax will be deducted and how we can go about it.
All right.
Thank you.
Okay, so thank you. Now,
Yes, ma'am.
your cooperative contribution is not a separate income. You know, let's say you are earning 100,000. Out of it, they take out 20,000 for cooperative and paid you 80,000 naira. Then after 6 months, they gathered all the 20,000 and paid you 120,000 naira. It's not an additional income. It's just that it is your money that they have removed, kept aside, and help you put it together so that you can have the money as a lump sum. So that amount is not taxable. It's not taxable. All right. So cooperative, and even if you run a cooperative society itself, is treated as an NGO and they are not subjected to tax. So a cooperative will not charge VAT to anybody. The cooperative is not going to be having profits that they will not be subjecting to company income tax. So cooperative societies are seen as like NGOs and they are not subjected to that. But in this case, you are not even running the cooperative. You are just contributing to the cooperative. So when they now put the money all together and say, yeah, take your plenty money now that you have contributed, it is not going to be subjected to any additional tax, because that your 100,000, which is your monthly money before, they would have deducted necessary tax. If it is taxable, they will have deducted the necessary tax from it. So the cooperative deduction from it will not be taxed again when it is given to you. So I don't know if that relates to the question you're asking.
Yes, I get it. Thanks so much. I get it. Yes.
All right.
Yeah, okay. Thanks so much.
So thank you, Ma. Since there's no more question, I don't know if you can still. No, you wanted to give us a rundown before I just said that we should first of all ask questions. So I don't know if you can give us a rundown. Like somebody is even asking what are the taxable stuff. Then somebody is raising up Mrs. Mrs. Modupe Otegbayo.
Otegbayo.
Yeah. You have a
Otegbayo.
question.
Good evening.
Good evening.
Yes, I have a question. My
Okay.
question goes thus. Like those people using that they are not using Android, how would they do the calculation? Like some people that are using Tonosobe, those small phones. You know, some of people are using that small phone to do transaction and they will still keep it at home. So for those people, how would they generate their record?
Okay, so for those people, they would have to keep their records on paper, using pen and paper, because they don't use Android phones to be able to track. They can keep on paper. Then, if they now need to do any final report or anything, they might require to get somebody who has a system that can help them to get it done. Okay, so
Thank you.
yes, sorry, ma. There's another and VYUC8X. Please, you can unmute and speak.
Please be
Your
fast.
hand-
So we have less than 10 minutes to we are
Hand is
updated.
raised, please. Can you quickly unmute and speak? Just unmute and speak.
Speak, ask your question.
Okay.
Maybe she's not even aware that she raised up her
Aware
hand.
that she has raised her hand. All right.
Mm.
So while I wait for
Sorry,
that,
I have a question here. Someone said, as an expert, I don't know if you can see it, Ma, or have you answered it?
I didn't see any expert question.
Okay.
I didn't see that.
Okay, I think you have answered it. She is okay as an okay, expenses incurred online. Okay, training, purchases of training. Okay, yes, that's a very sensitive question. Yes, teachers. Some people we buy courses, we sell courses.
Yes, all I've answered that. That was from Mr. Gabriel.
Okay,
Yes, I answered
okay,
that. All expenses, whether
okay,
it's online, paid in foreign exchange or paid in naira, all your expenses, but just ensure that you have documents to support them.
okay.
You might be able to pay your tax and go. Then after 2 years, they say, okay, let's now check. Maybe you are now needing a clearance and say, I need my tax clearance. I say, okay, let us even confirm that you have paid actually or you should have paid.
Yeah.
So those are the reasons why we say it is important we keep all our documents, and like we've been told, maximize your Google Drive to keep those information there. Okay. So a rundown again of the taxes. We mentioned that for small businesses below 100 million, that their assets, things that they own that belongs to them, building, land, furniture, equipment, is below 250 million, and their sales, all the sales they make in a year, is below 100 million. Those companies are called small, and they are exempted from VAT, CIT, CGT. They are exempted from that. But their own personal salary and the salary they pay to their staff is not exempted. They will still pay tax on their own personal salary and the salaries they pay to their staff. All right. So whether it's business name or it is limited liability, salaries paid to staff, except if that salary of the staff is less than 70,000 naira, so it's 67,000 naira and below. Those who are earning that amount, they are not subjected to tax in the new tax law effective from 2026 January. Okay, so that's one tax. Another tax I want us to pay attention to is what is called the withholding tax. So it's possible that maybe you consulted for a company and you are expecting them to pay you 250,000. They now paid you 225,000. Why did you remove my money? Or they paid you 237,500. Why did they remove my money? Why did they remove my money? And that says withholding tax. So they've removed your money. They have only helped you to pay ahead for your tax, but you must follow them up to say, oh, pay that money you removed into my tax account. So if you have such issues, just follow them up to say, pay it into my tax account. Once they pay it, the only challenge is that if you don't have access to your tax portal, you will not know. So it's also important that we have access to our tax portal, especially if we are dealing with corporate clients. They are the ones that are able to do that withholding from our monies. Then lastly is that we should ensure that we file our returns. So if you have set up a business and then you have set up a business, you have commenced, you need to register and be filing. Filing means to go back there and say, okay, in this month I made sales of 500,000. In this month I made sales of 0. So even if you made sales of nothing, you will still go and file. If you made 500,000, you will still file. So we file our accounts every month. Okay. And at the end of the year, if you are a limited liability company, you will then need to prepare your audited financials and pay your taxes. If you are below 100 million, no tax will be paid. You just prepare your audited account and file it. If you are a business name, no need of any audited account. Just go and pay your self-assessment to your state government. So I think that's about the summary. Documentation, you shouldn't forget that is very important. So on this note, I want to say a big thank you to everyone for your time and the opportunity.
Thank you so much. We really appreciate it. It's as if we should not stop this section, but unfortunately,
Yes.
we have
So if
to
it is
stop.
below 2 million, your contract fee is below 2 million, and the new tax law exempts them from withholding. It exempts them from withholding. They are not supposed to withhold. But some people are so stubborn. They will still withhold. So if for any reason they withhold, follow them up. But they are not expected to withhold if your contract fee is less than 2 million naira.
All right, thank you. Let's give her a round of applause, please. Let's give her a virtual clap. Let's celebrate her. Let's thank her. Let's celebrate her. Now, yeah. Can
Thank you,
you use the
everyone.
reaction button, please? Celebrate her, celebrate her, celebrate her. Thank you so much. Thank you
Thank
so
you,
much.
everyone.
We
I
really,
appreciate
really
it.
appreciate you. It's as if we should just continue because this thing is just, we've been hearing a lot and everybody is scared. If someone even told me that they will block somebody's account, all those things that are not true, do you get it? At least you have enlightened us, and we recorded this so that we'll be able to enlighten others, so that it will be uploaded, people will also listen to it and they will also benefit. But I want to ask, you work with a tax officer, and a tax officer, I know you have a company you work with. How can you now help us as a company? I don't know, is it possible we have to do everything in our state and online? You are just here to sensitize us and to create awareness.
Okay, so I think it would be better you do in your state.
Okay.
I would prefer that you are able to engage, because when you engage a consultant that is out of the state, the cost implication, especially when it requires any physical visits to the tax office, you'd have to charge that cost to you. So if you're able to get, but if it is just advisory clarifications, of course, we can give that information. Okay, I'm just a chat away from you. And get those clarifications.
All right. Thank you so
Once you are
much.
able to even set up the online platform, it's easier that way than going to their offices for anyone.
Okay. All right. Thank you so much, Ma. We celebrate you. Thank you for your time.
All right.
Thank you
Thank
once
you,
again.
everyone. I
All right.
appreciate it.
All right.
Let's have a wonderful
Good night rest.
Thank you, Ma. Bye.
Bye, Ma. So, my people, you have learned one or two things, right? So please let us take documentation seriously. Okay, let us take it seriously, and I will upload this on the YouTube channel. You go and watch it again. It's a reminder.
Yes,
Keep
sir.
watching it. And all those tools, Google Workspace tools that we have learned, please, it is now time. If you don't know them before, go back and take your classes. Can you see that it is not a joke to learn the guitar skills? If you don't know the guitar skills this time around, you are on your own. You are on your own. So thank you so much for coming. I sincerely appreciate you. All right. So do have a wonderful night rest. Bye-bye. We'll continue our chat on the group. Bye-bye.